there, welcome to Equity Guru's Gauntlet Series, where I light a fire under a CEO and ask the questions that generally get asked in the deep, dark message boards of the internet, with a view to getting as full a profile of the company as we possibly can. With me today is Kory Zelickson from Vejii Holdings. How would you describe Vejii in 30 words or less, Kory?
Okay, well, you can count the words, but Vejii is a digital marketplace that helps provide consumers with access to plant-based and sustainable living products. We provide consumers with variety and selection, and we support brands onboarding through the platform, connecting with an audience of like-minded consumers and having access to our additional resources from distribution to digital marketing services.
That's pretty succinct. You got around about the 30 words. All right, so the idea of the Gauntlet series is that we give you a bit of a roasting and see if you can stand up to the harder questions. I'm going to open with the one that I guess has the most potential for prickliness, and that is, you're one of the co-founders of Namaste. Namaste and I tangled a bit back in the day. Certainly, there's probably something to be said for I might have gone harder than I should have, and probably there were some things that probably shouldn't have happened that did. What did you take away from your Namaste experience?
Well, frankly, I learned a lot through the experience with Namaste. We got into the market very early stage, and originally what we had built out was similarly a marketplace and a platform for cannabis devices and accessories. And what happened was, as a company at that stage, going to market, it must have been in 2014 or 2013, where the industry was just starting. A lot of capital in the space at the time was being deployed into the growers, right? So, investment banks were looking at how many kilograms are you going to grow? What's your cost per gram? How many square feet are you growing in? And so we were really, truly one of the first sort of tech/e-commerce plays coming to market at that stage. And it took a while for the company to gain traction, but when it did, it took off, and there was a lot of things that happened in the industry. Access to capital was quite a bit different back then too. I was very passionate, as I still am, about that space. And for me personally, I don't like to take on projects that I'm not personally passionate about. I'm not a naturally born salesman. I can get behind things that I believe in. Mm-hmm. I believe very much in the cannabis space, and of course, there was a big run and the bubble popped and it came back down. So I think one thing that people forget is that as many people that bought in on the hype and lost money, there was just as many people that saw companies early stage and invested and made money as well. So, I gained a lot of experience through the process in terms of, capital markets and raising capital and being in an IR and biz dev role as well. So I've taken all the experience through, lessons learned, and really tried to reorient, this project a little bit differently from how it had been in the past.
If there's one thing that I can sort of say about Namaste, is that when you guys, even pre-public markets, you guys had built something that was actually generating revenue when no one else was.
Exactly.
And with a very similar model to what you've got right now with Vejii, which basically is early stage Namaste for plant-based foods, right?
Yeah, I mean, there's more or less there's some key differences from an operational perspective between the way that Namaste was structured back then. As an example, like as a marketplace, right? You're servicing customers with product, and you're also servicing brands through access to that network of consumers. And so with Vejii, a key difference, and it was only later stages at Namaste with CanMart where we were starting to look at these consignment relationships. And so because we've, as Vejii, have gained so much traction over the past year, we've onboarded over 180 independent brands to the platform. Brands are really understanding the value of what we can add to their products, and having the ability to ship and distribute product, frozen items direct to consumer, and a lot of the digital marketing resources that we have that brands are taking advantage of. We've gone a step further where we have now brands, and if you look at like our Vejii Express platform, right, which is all the internally stocked inventory, today over 40% of that product is product on consignment. So we have brands coming to us, putting pallets into inventory, and we're helping them deliver their product direct to consumer, getting eyeballs on the products. And in some cases now too, we're actually doing the shipping and fulfillment for those brands' own D2C websites too.
Interesting. So I guess one of the similarities between plant-based and cannabis industries is there's a lot of mom and pop operations out there. That comes with pluses and negatives, right? They know their product better. They may not be able to handle the admin as well. So you're providing them a service that a lot of these companies, I'm sure it saves them having to hire people and outlay a bunch of cash that maybe they don't have at the start.
Yeah, exactly. And the best example I think there is that distribution network. And so when we started, right, with our first distribution center being in Austin, Texas, our goal was to acquire customers. And so if you were, in New York and you wanted to order a pack of Beyond Burgers, that would be shipped air freight from Texas to New York. And so in the initial stages of the company, there's a lot of extra costs associated with operations to drive growth. But now that we've acquired Vegan Essentials, which again was, a real family-owned business prior to us taking over, we've added distribution centers on the East Coast, and with VEJI.C, we've added an additional 3 distribution centers. So going from where we started to today, having 5 DCs across the US, we can now service the entire country with 2 to 3 day ground delivery. And it's still, from an environmental impact perspective, unfortunately, we have to pack with dry ice and gel packs and foam liners and stuff like that, which isn't ideal. But taking it a step further, what we're really focused on is on regionalized distribution. So starting to leverage those local warehouses we have that are strategically located in dense populous areas like California or Atlanta or Texas, and then starting to use last mile delivery couriers where we can eliminate a lot of the shipping, packing materials, reduce costs and our environmental impact, and also deliver faster to consumers by getting product closer to our customers.
We certainly, I guess with the ready-made meal delivery services, consumers are getting more used to food being something that they can get next day. A lot of those services have gone through the stress of how to fulfill orders properly when growth is still happening. Obviously, you're in a growth phase. At what point do you think, looking at your financials, people will be able to see growth of revenue and profits rather than just, raising money to build new centers and infrastructure?
No, that's a very fair question. And I think that part of the process of scaling and one of the biggest impacts for us is having these distribution centers, which really affects the bottom line in terms of our shipping and packing costs, which are a major component of our cost structure. So from that perspective, I think that, our plan is to reach operational profitability in 2022 and reach full corporate profitability in 2023. That, of course, comes with economies of scale. Having completed 2 acquisitions now, we're looking at opportunities where we can add, for example, the Veggie Express SKUs of inventory over to Vegan Essentials, and then getting some of that over to the warehouse in Oakland, which is the VEJI.C warehouse. As an example, too, Vegan Essentials is an e-commerce website that sells vegan groceries. They've been around for like 20 years. They were doing mail order delivery for vegan food before online platforms existed in that same way. And so because prior to COVID, Vegan Essentials had a huge business actually in selling product across to California. They were even selling and shipping into Canada and the UK. But after COVID, with shipping rates going up astronomically, it became uneconomical for them to ship to California. So we have an existing base of consumers and clients in that database that we can start retargeting through our California warehouse. So taking advantage of operational synergies and economies of scale are some of the key areas that we think we can leverage to improve gross margin. If you look back from our Q3 financial statements, which are the last disclosed financials, we were looking at a gross margin of about 23%, but we actually hit 37% gross margin in January this year. So, okay. and that was really just with the Vegan Essentials acquisition in one quarter. So we closed VEJI.C on December 31st. So once we get in a full quarter of revenue and growth with Vegan Essentials and VEJI.C and Shop Veggie together, we're going to continue to focus on operational synergies, improving margin. There's cases now too where, because our internal inventory now, where we're actually buying it versus the consignment, we're buying through, national distributors to stock into our warehouses. As we continue to get scale, we now have direct purchasing relationships with brands that can have a major impact on our margin too.
Got it. So, essentially, if I'm looking at 37% margin, that beats supermarket margins, doesn't it?
It's pretty close. The margins are getting better, and we've really focused so far on our key sort of acquisition funnel for customers being in food products, because when we launched the site, we put 3,000 SKUs for sale. All of that was facilitated through national dropship distributors. And so we spent the first few months really understanding what product categories people were looking for. And it didn't take long to identify that most people were going to the site to look for frozen plant-based proteins like meat, dairy, seafood, egg alternatives. And that's what really sparked us to start building out that Veggie Express platform. And we started migrating inventory out of these distributors and over to our own, where we can control the customer experience and delivery times. And so from that, that had a big impact on margin and customer experience. And so, creating these direct purchasing relationships with some of the brands, you've seen some of the press releases. We've taken a lot of the Canadian pubcos and the Canadian CPG companies into the US markets, and we sort of work on a fulsome product launch with them as well.
So obviously getting products on shelves traditionally is a business for those with deep pockets. You're basically buying shelf space and have to kick someone else out. Your model is a different story. I guess you got the advantage as well of having data to look at when you bring in products on consignment. If they don't sell, best before passes, that's someone else's problem.
Yeah, exactly. And what we found, just in the last year, right, there's been hundreds of new brands coming to market. And if you look even at the alt protein space, all these companies are competing on the same qualities, taste, and texture profile. And then they're going and they're competing for the same shelf space in the top 5 retail box stores. So everybody's trying to get into Kroger, Walmart, Whole Foods. And the reality is that there's just not enough shelf space in America to accommodate the influx of brands coming to market. And at the end of the day, when I stopped eating meat, probably 8 years ago, there wasn't a lot of options. You were eating Boca burgers and tofu. And so you go into the grocery store today and there's a lot more variety. You might have 5, 10, or even 20 different brands of product available. But at the end of the day, the shelf space is ultimately limited. And our ability to scale brands is indefinite. We've done 180 independent brands. We have a queue of over 200 brands today that are in some form of the process for onboarding to the site. And that's where we really feel that we have the ability to continue to grow and scale, because while the added competition makes it difficult for brands to get into retail distribution, our ability to bring products and speed to market actually is where Vejii thrives.
Got it. So one thing that the big brands have always got an advantage over the mom and pops in is price pressure. If the cost of ingredients rises for Coca-Cola, they ain't paying more than they've contracted, whereas mom and pop, if inflation is up, so are their costs. How do you handle price fluctuation dealing with the brands that you're dealing with?
Generally speaking, and in any industries that I've been involved with, where you're working with sort of like the top brands or even small startups, as a marketplace, we're somewhat brand agnostic, and so from that perspective, in most of the agreements that we have, we will always adhere to a MAP price or a minimum advertised selling price. And so for us, that those fluctuations in costs, I think, impact the brands more than they do us. And our goal is always to adhere to MAP pricing while also being as competitive as we can in terms of our retail pricing.
Now, certainly there's a large segment of the population that would love to be shopping from a healthier basket, but price is really the dictator for them. Are you confident that you can get prices down to a point where it's not really a price-based decision whether to do business with your companies on it?
You know what? I think that for a lot of people, it's always a price-based decision. And from the perspective of the Shop Veggie platform, we always try to keep that website as competitive price-wise as possible. And what's interesting is if you look at Vegan Essentials, which is our wholly owned subsidiary, their prices are generally a little bit higher. They've developed a really loyal core audience of consumers over the past 20 years that are willing to pay a bit of a premium for the offering that they have. And they carry a lot of the more specialty and boutique products. And the fact is that a lot of the stuff that we carry on our site or on Vegan Essentials are products that just simply aren't even available in grocery stores. So you might have, like we said, 10 or 20 brands in a grocery store. We have 500 for sale on the website today. And a big key differentiator too is that our platform is much more than an e-commerce platform, right? We're a marketplace. We support and scale brands, but we also have a broad range of categories that go outside of plant-based foods. Even today we have, sustainable cosmetics and personal care products and vitamins and supplements. And I just think that the overall consumer sentiment is shifting towards a more sustainable lifestyle.
It's certainly something that I've seen in my own life. Like, I'm a carnivore from way back. You'll never get me not to eat animals, but sustainability is important to me, right? I'm happy to chow down on a steak from a cow that's been lovingly raised in a grass paddock, as opposed to a slop-filled factory farm. So, I see that what you're doing there it's not a vegan marketplace, which I think a lot of people would dismissively call it. It's a sustainable, less cruel, less processed, more healthy marketplace, which I think very few people would struggle to want to be taking advantage of.
Yeah, and that's part of the reason that, because like you said, veggie and what we're trying to target in terms of our audience is to the broader mainstream market. And for me, me selling you, Chris, a pack of Beyond Burgers as somebody that also eats meat is a bigger win to me than selling a pack of Beyond Burgers to somebody that's vegan, right?
Right.
And it's part of the reason too that we kept, rather than integrating Vegan Essentials into Vejii, we've kept it to some extent ring-fenced as its own business, because they are catering to that sort of strict ethical vegan audience under that umbrella, whereas Vejii is catering to a bit broader of an audience and broader assortment of product categories.
Got it. I guess the only way to really get someone to that vegan place is to do it gradually, to make them realize. I dated a vegan a few years ago who fed me bacon and eggs, and it tasted fantastic. And then she told me it was jackfruit and a bunch of other things, and I was quite dismayed. But the difference between a healthy meal and a not healthy meal is not necessarily meat, animal related versus non-animal related. There's certainly a lot of things that go on in the vegan side to make things as edible as possible. Tell me, the products that you're dealing with, are they generally more shelf stable than animal and dairy-based products?
Yes, definitely. In general, more shelf stable, because you don't have, the same types of bacteria that can develop on animal products. And in regards to your comment too, I do wholly agree with you, is that just because somebody is vegan or eating plant-based doesn't make their diet healthy necessarily. It's whether you're consuming processed foods, the fat content, sodium content. There's a lot of factors there, and I believe that there's a bit of a shift towards clean label ingredients that we're seeing as well, and some of the brands that are coming to market, where it's not just about imitating meat, but it's more about the nutritional value also. And there's a lot of, even today where you have, a market that's struggling, you have companies like Beyond Meat and Oatly that are at lows. It's really not, in my opinion, indicative of the actual market for plant-based foods and sustainability, because we're just seeing so much continuous innovation from new brands coming to the market, and technologies like cell cultured meat, which I think will be very impactful in the future once they're regulated in the North American markets too. That would be something for me personally. I love the technology and very excited to have the opportunity to launch and create a category for those types of products in the platform. But yes, I mean, products generally more shelf stable, but certainly not the case that it means that it's healthier necessarily either. It might be more sustainable. I think that's a safe bet.
Generally speaking, in any sector, the big boys, what happens to their stock is going to dictate what happens to those below. Certainly, the outrageous valuations that were coming to plant-based companies 2 years ago had to be tempered eventually. Do you think that general sector downwind is bringing your stock down as well? Because a $9 million market cap, as I see it today, is absurd for what you've acquired.
No, I appreciate that. And I do feel the same way, like based on where we're trading today. Of course, as you mentioned, macro level economics and market conditions within the plant-based industry have changed a lot, and just generally in the stock market across the board, even more recently too. So valuations were absurd 2 years ago. And I think that the market has to find the happy medium in terms of valuations for companies in this space. As well, if you look at most of the companies that have come to market so far, they've been CPG companies and manufacturers, whereas there's not as much in terms of like the tech side. There's quite a bit of investment happening in food tech though. But I think that I really believe strongly in the longevity of the industry overall, and it'll just be a matter of time before the markets stabilize and find that balancing point between overvalued and where we are today.
Based on your revenue numbers in January, it looks like you're trading at about 1.4 times annual revenue, which is bonkers. Like, if you were selling bricks, that wouldn't make sense. So I think now's probably a good time for people to sort of look at that as a really good buy, not even on the dips, just on the regular. Like, it just seems absurd to me. I think one last comment for you. There'd be a lot of people out there that think anyone who's going to be a vegan or maybe even a vegetarian is already a vegetarian or a vegan. That certainly doesn't seem to be the case in my family, where I'm generally cooking for myself these days. What are you finding data-wise, trend-wise on your customer base?
In terms of like products and
in terms of
categories?
just like new customer acquisition, people coming across from the Safeway beefsteak tomato to the organic tomato that tastes like it used to.
Yeah, so I mean, a couple of the interesting relations there in terms of customer acquisition is that typically we see the first customer coming in at a bit lower of a value because people want to test the platform, make sure they get their product arrive frozen in good condition. Today, about half of our revenue is returning customers as well, which is great. And then we continue to see sort of like the basket sizes increasing over time. And from a product and category perspective, while there's been a lot of traction for, plant-based burgers and stuff like that, and the plant-based chicken industry is growing really quickly with brands like Daring Foods, the biggest and fastest growing category that we've seen trending over the last 8 to 10 months has been plant-based seafood, which is really exciting. There's a lot of innovative companies, especially on the US market side, that are developing whole cut plant-based seafood options. And that's going to be something I think that'll continue to grow. And I think that consumers that are getting introduced to these products are coming back to continue to purchase.
Well, as somebody who has been dealing in online marketplaces now for, what has it been, 7, 8 years, I think you're well placed to take advantage of this. And certainly plant-based foods aren't going anywhere but up over the next, our lifetimes. So congratulations on what you've built. And Kory Zelickson, thanks for joining us on the Gauntlet.
Thanks, Chris.
VEJI is the ticker symbol, and we'll catch up again soon.